Greetings, members, one and all of the Salivation Nation. Gold and silver have taken quite a big hit over the last day or two. Actually, today they've tried to recover a little bit, but not a whole lot. They're still down below. So it's a big disappointment for those of you who are hoping that we were starting to see a major bull run for gold and silver. But don't lose heart, because I still think it's probably coming, at least in some form or another. But you think about it, what is causing this? What is causing these prices to go so high anyways? Because when you think about it, there's a lot of good economic data out there, but the prices still continue to be relatively high. And it's all because of the nervousness of the markets. And as this headline suggests here from CNBC, sourcing from Reuters, gold faces the biggest fall in over a month as trade hopes revive. That's the clue, folks. Let's explore. Yes, indeed. Gold fell 2% on Tuesday en route to its biggest one-day dip in over a month, as expectations of the United States may drop tariffs on Chinese imports assuaged some fears of a global recession. Spot gold slid 1.8% to $1,481.81 per ounce. U.S. gold futures settled down 1.8% at $1,483.70 per ounce. The metal, which tends to gain during times of economic and political crisis, fell as much as 2% to its lowest level in nearly 3 weeks, at $1,479.25 an ounce earlier in the session, and was on track for its biggest one-day percentage drop since late September. The main factor for gold's slide is a rollback in some of the Chinese import tariffs and part of the Phase 1 trade deal going through, said Bob Habercorn, senior market strategist at RJO Futures. Now, keep in mind that it actually hasn't been signed yet. Phase 1 hasn't. But these are some of the preliminary good faith actions that are going on that are giving some hope for the markets here. Also, global equities have been trading significantly higher in the last few sessions, coupled with a little bit of a break in the U.S.-China trade tariffs, putting pressure on anything where there is safety right now. China hopes for the removal of more tariffs imposed by the United States in September as part of a Phase 1 U.S.-China trade deal, which may be signed this month. Actually, they're saying now it might be in December when it will be signed by U.S. President Donald Trump and Chinese President Xi Jinping. Trade truce hopes and upbeat economic data rekindled optimism about the global economic outlook and pushed the dollar index and bond yields higher. The greenback also got a boost after the release of the better-than-expected U.S. ISM non-manufacturing data for October, further pressuring the bullion. Rallying world stock markets that saw the U.S. indexes score more record highs overnight are keeping demand for the safe haven metals squelched, Kitco Metals senior analyst Jim Wyckoff said in a note. Risk sentiment worldwide remains upbeat amid ideas the U.S. and China are very close to a partial trade deal. That's really the kicker here. Meanwhile, a slew of investment in gold-backed exchange-traded funds offset a decline in purchases of jewelry, bars, and coins to push global gold demand slightly higher in the third quarter, the World Gold Council said on Tuesday. Among other metals, silver dropped 2.4%, so it took a bigger hit to $17.61 per ounce after falling to its lowest since October 24th, while platinum fell 0.8% to $927.75 per ounce. Palladium edged 1.1% lower to $1,777.66 an ounce, having touched its lowest in nearly 2 weeks. The metal hit an all-time high of $1,824.50 on October the 30th, driven by a sustained supply crunch for the auto catalyst metal. So there it is, a supply crunch. It is a very rare metal, I'll give it that. But why not use platinum? What's the deal? Why aren't they retooling for that? But that's another subject. With palladium expected to stay in deficit and a new mine supply additions lacking next year, prices are likely to remain propped up to incentivize more scrap supply and curb demand growth. UBS commodity analyst Giovanni Stavano said in a note. And again, it begs the question, why aren't they retooling or preparing to use platinum more? Because platinum can be used as well. Now, that being said, that leaves us with the question here today, since there's not been a whole lot of movement in the prices since the big sell-off on Tuesday. Today is Wednesday, November the 6th. Are gold and silver breaking down? Now, the thing is this is part of the game that these analysts do. When things are going up, it's easy to make bold predictions when the price is going up for multiple days. But when it goes down, well, then there start to get fear and some questions. What's going on here? Are they breaking down? Well, it was basically one day of negative growth, and falling prices. Today, basically, the price have creeped up just slightly, a little bit, trying to recover some of those losses. Didn't get there, but it was a little bit close here. But Bubba Horowitz says all the excitement of gold and silver breaking out to the upside has dissipated with Tuesday $25 sell-off for gold. More percentage-wise after silver. All those clamoring for the next bull run have been run over once again. Those who traded based on news flow are wondering what just ran over them. We stood on the technicals maintaining our pricing model, which suggests $1,520 was resistance in gold and $18.10 in silver. In one day, both metals broke down to support and are now in danger of breaking down. The next few days will tell the story for the next big moves of both gold and silver. As we said at the top, we are staying short. However, the metals are now back on support. A rally would be no surprise, but overall our view is a breakdown of $1,460 to the $1,440 level is still in play, and we still stay short until proven wrong. So that's kind of the short end of that stick, pun intended there. As we take a look here, are the prices for gold and silver. As you can see from yesterday, they've tried to recover some of those losses. Gold has, especially here, moving up. And as we see, still is the case, silver, a much more volatile metal, and it's not recovering as well as gold is now. Just a little less than half of the growth recovery period here for it. So gold is still well below that $1,500 level. So where is the floor now for gold? My guess is about $1,475, I think. I don't think it's going to go below that, but it could be. That's just my feeling. I don't do the technical analysis thing. It's just my gut kind of telling me. I do hope it goes below that because I'm a buyer of gold. In fact, I made some purchases recently before this big dip, unfortunately. I hate when that happens. It's called Salivate's Law. Some people relegate it to Murphy, but I think I can take ownership, although I have been fortunate in some purchases this year, but not by much. And silver, I believe, has a floor, a pretty solid resistance at $17 an ounce. And I think that it'll hold on to that level, at least there. So we'll see how it plays out as the year draws to a close. But it is interesting to see, and I think that given where the price and the movement is in these metal prices and how it's reacting, I think the one thing is for sure, all of these gains we're seeing are because of concerns over trade and Brexit to a point. Once these things get resolved, some of these big gains we've seen, they may just dissipate and go away. But I don't think it'll be as much as some people say. Like I said, I think that if, let's say they were to sign the complete phase one trade deal tomorrow, we may see gold get hit pretty hard. Possibly go down to $1,450, but I think that would be probably as low as it'll go. We know that's not going to happen. That would be the best of the best news for that particular case there. And silver, I still don't think silver will go below $17. I really don't. It may lose 70 cents. It may get very close to it. But I think we're in new territory with gold and silver that we've not seen in recent history, We've been used to seeing, $1,200, $1,300 gold for a while, and silver being below $16 an ounce, around the $15 range. So I think there's some hope there for those of you who have been discouraged about metals prices, especially with regards to whether or not questioning whether or not they really are preserving your wealth. Yes, they do preserve your wealth. Both metals do, but you have to wait it out. You got to hold on, and part of that is also buying at different price points. You know, you can't expect whenever you save any kind of money, you can't expect that you're going to come out way ahead or what have you. Saving money is an ongoing process for most of us. And the same thing when you're saving in precious metals, it's an ongoing process. The difference is that the actual weight of the metal will be at different price points depending on the health of the economy, depending on the psychology that's behind it. And that's just it, folks. Psychology is playing a huge part in this market and where people's concerns are. Because really, the phase one trade deal implementation, less tariffs or whatever, that can change tomorrow. And it may not be long-standing. Tomorrow we can come back and they're nervous about the trade deal because of this small little aspect of it, and these prices can shoot right back up again. That's how moody the market is. The moody market. Yes, indeed. So what needs to happen is a marination of the prices, and we're seeing that to some level and some degree. And I reference back to the video. Of course, I don't remember where it is. You can search for it, but it's a $1,500 gold, $17 silver. Well, look where we're at. Today, we're still kind of at that point. For the most part, gold is a little bit less than $1,500 there. And because that floor is not as solid, it's a little bit of a squishy floor. But silver has been pretty solid, save for one time, for a very brief amount of time. It got below $17 in the high 16s for like a couple hours, maybe tops. But that recovery was held within that single day. And that's kind of where it is. So rest assured, be encouraged as you accumulate these metals. And I would even say that to Bubba here, Todd Bubba Horowitz. It's just, he gets into the weeds with these candlesticks and this and all this technical analysis, which is fine. But I think there's not seeing the forest through the trees when you get too embedded in that kind of analysis, which is why I never really studied so much on it, because there's so many different factors at play. But there you have it. So post your thoughts below what you think about today's analysis and news here on the precious metal prices and the little bit of a slow recovery there. And again, reminding all my viewers that I do post videos every single day. And so if you miss seeing it in your notifications or on your subscription feed, and as this has been happening as of late, people been getting kicked off the subscription list. I've seen my subscriber count go down a bit, and I think some people have been reporting that they've been actually kicked out or kicked off, not subscribed. So please check back on the page every day if you're interested in this kind of news and fascinating stuff here we talk about on this channel. And I want to extend a multitude of gratitude to all of you who do stop by. More than half of my viewers recently have been from non-subscribers. So I appreciate you all stopping by and taking a look. And I want to encourage you to please rate, share, and for those of you who aren't subscribed, you'll never guess what I'm going to ask you to do next. Yeah, why not? What the hay bale? Go ahead and hit that subscribe button.